This isn't just a forecast that slaps down the Trump administration. It's a whole statement that slaps down the president's administration and their own forecast for where they think growth is going to be. Vadim, where do you sit on that?
Well, look, mathematically, to get the 3% growth, you need to have labor participation pick up. You need to have stronger growth in the number of hours, and you need to have productivity move up. Thus far, we haven't seen improvement in either of those two variables. Going into the beginning of the year, there was a significant pickup in small business confidence. That is a huge positive. Capital spending intentions have risen dramatically. Now, with the increased uncertainty as to the timing of the fiscal stimulus, you are seeing corporations hold back a bit on some of the spending plans that they've initiated. And that is actually driving, I think, some of the short-term weakness.
So when you take a look at what the IMF is saying in terms of slapping down Donald Trump's growth plan, and you're right, I do joke that they downgrade, but this seems a little different because they're specifically targeting the policies. How do you express that in the market? I mean, when we're still right around record highs, how do you factor that in?
Yeah, and I think it's also important to understand that markets tend to be very anticipatory. So since the beginning of the year, even though the S&P is up some 9%, it has actually been led by the more defensive parts of the market. You actually haven't had the investors embrace the recovery that many of the businesses claim is forthcoming. And so what's interesting is many of the secular growth stocks, defensive stocks that are not dependent on a robust economic recovery actually led the market. I actually think what could happen between now and the year end, you could have the markets that are essentially flat, but within that, some of the cyclical stocks start to recover.